Are you thinking about purchasing a home and want to obtain financing, but have no clue where to start and what type of programs they have? Well, stay tuned. All right, guys, if this is your first time tuning into this channel, my name's Chakits, Krulsawat with Simply Vegas, a licensed real estate agent out here in Las Vegas, Nevada. We sell homes here and across the country. And also, if you're thinking about selling a home, let us know. We can help you buy and sell. So today I want to talk about going out, buying a home. First thing that you need is a financing. I get this question asked all the time. Hey, do you have FHA loans? Do you have conventional loans? Do you have some sort of loan programs? Well, here's the thing. As a licensed real estate agent, we do not do loans. However, we work with every type of loan that's out there. Getting a loan is just one piece of a real estate transaction. As a licensed real estate agent, we are the guy that connects you to everybody that's a part of the transaction. We facilitate the deal. So I'm gonna go over a couple loan programs that we have out here in Las Vegas and loan programs that you may want to check in your state as well. So one of the loan programs that I see right now is the down payment assistance program. This is where you just don't have enough money for a down payment. So let's just say your down payment is 3% of $500,000, and that means you have to put down $15,000 to obtain the loan. However, keep in mind there's closing costs involved as well, but that's a whole nother subject. So if you're buying a home for $500,000 because you're qualified for $500,000, you got to come up with $15,000. The question is, do you have the money? If you don't, there's a program. So with the down payment assistance program, here are some of the eligibilities that you must take a look at in order to qualify for this loan. If you have a credit score, you can go down as low as 600. Now, a lot of institutions will finance you at 620, 640, but anything below 620, you're probably not gonna get financed. But with this down payment assistance program, you can go all the way down to 600. However, your interest rate may be a little bit higher, so that's something that you may want to keep in mind. They actually do 100% of the financing. So that means you put zero down. What are the qualifications? It says here, the income can go as high as $130,000 for 2 people or over $150,000 in a yearly income depending on family size. So these are things that you're gonna have to see if you qualify for with this type of loan program. Now, I'm not gonna go too deep into it because there's so many other programs that I wanna share with you, so that way we can get your feet wet and get you started. But also, make sure to click on the link in the description below if you guys want the full detail and get the process started, or give us a call, okay? Now, another thing here is the debt to income ratio. What is a debt to income ratio? Basically, it's how much money is coming in and how much debt you have. Typically, when you go out and you get financing, majority of the lenders can take you all the way up at about 42%. So if you make $10,000 a month, it says based upon your debt to income ratio, you can go all the way up to $4,200 a month, and that's it. However, with this, they can actually peg you all the way up from 56 to 57% on a debt to income ratio. That's pretty high, believe it or not. But at the end of the day, if you can take it all the way up to 57%, you probably don't want to spend all the way up to 57% because now you're going to be house broke. So I would advise you probably not to do that. First time home buyer programs, 3%. Believe it or not, you put down 3% on a conventional loan, but you also have mortgage insurance premium. So this is something that you have to take a look at, okay? Now, with a conventional loan at 3%, those deals are gonna be a little bit more easier to do, especially when it comes to the appraisal versus FHA. So that's something else we're gonna take a look. FHA stands for Federal Housing Administration, which allows you to put down 3.5% of the purchase price. So if you buy a home that's at $200,000, your down payment to obtain a $200,000 home is $7,000. Not including closing costs, another 3%. But it doesn't mean that you can't negotiate that. With the FHA, you got mortgage insurance premium, but what's great about this is if your credit score sucks and you got a credit score of 580, you still can get financed, right? But you're gonna be paying a higher premium. That's just the way it is, okay? Now, believe it or not, there are some programs out there where you can actually renovate your home with the loan. They roll the money into the loan. And this works in today's market where the market is booming. You can't get into a move-in ready home because everybody else is buying it. But then you may see a diamond in the rough where it just needs a little bit work, but you don't have the money to rehab it. Now with this type of loan, it allows you to go in and rehab that money. However, it doesn't mean that you just take that money and you spend it. What happens is that money is held in an escrow account and they do draws as they remodel your kitchen or your bathroom. So it's something to consider. Now, this is one of my favorite loans. This is a VA loan, right? Veterans. If you are a veteran out there, this is something that I would definitely utilize because you just put down $1 and you're eligible for as much as you want based upon the county guidelines. And that's another topic that we need to talk about. Depending on FHA, VA, or conventional, right? There's certain county guidelines. So like, let me give you an example. Depending on your state, if you go FHA, right? You need to see what the county max is. Some county maxes could be at 500, some could be at 800,000, which means that's the max that you can borrow. Keep that in mind, that is very important, okay? Now, with the VA, 100% financing for veterans. Credit score, 580 or better. Now, what I like about VA financing is this. The interest rates are always gonna be the best interest rates out of them all. That's the benefit. Another thing is that you have to keep in mind is a lot of people think about, hey, I'm getting a VA loan. As you get a VA loan, right, you put $0 down, and then a lot of times consumers think that you don't have to pay closing costs. Believe it or not, closing costs is about 3%. Typically those fees are fees from title escrow fees, and majority of them are gonna be your lender fee. A lot of people think that you don't have to pay for it because the lender that is doing the VA financing probably has no clue what's customary in today's market and what's going on with the housing market. And that's the reason why you need to work with the right agent that understands the current market and what is going on. A lot of lenders will say, look, you can get in for less than $500, but they're not telling you that you have to negotiate the 3% to have the seller pay for it. It's just unfortunately in today's market you can't do that because the median price point for a home, let's just say today is at $500,000. You go out, you look at a move-in ready home because there's so much demand, a low supply, you're fighting for the same home, that seller's not gonna pay for your closing costs. And now you're being misled. And it's not the lender's fault, but what the lender doesn't do is really inform you. So it's just something you need to be aware of. There's times when the market is down, you can ask for the 3% closing costs, and that's not a problem. So it's a case-by-case situation. Conventional, pending on the type of conventional. 5% down option, minimum credit score is 620. Now at 620, they also do renovation financing too as well. So if you need to do a rental, we got you on that. There's so many programs out here that people are just not aware of, okay? Credit score 620 and higher. Now, if you are planning on purchasing a mobile home, there's financing for that too as well. Now guys, don't call me for a mobile home because I don't do mobile homes. At the end of the day, it is what it is. But I want you to know that there's programs out there that we can help you with that too as well. Condos. Not all condos will qualify for traditional financing, but we have a program for condos. Credit score 620 and up. That's right. Okay, contact us today and we will hook you up. Now, let's talk about jumbo loans. What is a jumbo loan? So basically a jumbo loan is this. You remember how I was talking about the county has certain limits on what you can borrow based upon the type of loan. Once you pass those limits, now becomes a jumbo loan. Now it's not traditional financing. That means your lender has to go find an investor out there and find you the money. So it's not traditional banking, it's a third party. So let's just say the jumbo loan is at 2 million. Your interest rates may be a little bit higher. Your down payment could be anywhere from 20 to 25%. That's right, that is a lot of money. However, there's certain guidelines that you will have to meet with that investor, okay? This is what we call overlay. Then you have your lender with the underwriter, and you would have to make sure that you meet all these qualifications. Now, here's another one, HELOC. Now, if you want a HELOC, minimum credit score, 640, LTV, right, which is loan to value, up to 90%. Now, for investment properties, this is great, up to 85% LTV. So, if you guys want to, pull out some money, you'll probably be able to do this. But you need to make sure that you have up to 90% loan to value. Okay, investment properties, 85%. This is if you're gonna leverage out your money. Here's another one, home selection. Credit scores, 700 and higher. LTV on this one is 90%. As long as you got 90%, you're good to go. Now we also have another one right here, USDA for rural, 100% financing, okay? Minimum credit score, 600 and above. And this only applies to some areas. So if you're trying to buy a piece of dirt, maybe can help you out on this too as well. All right, let's talk about non-QM loans and the requirements. So what this is they do not use your income, right? As far as a W-2 employees, if you're self-employed, this is something that you may want to take a look at. In addition to that, if you are buying like a fourplex, believe it or not, you can actually use that income towards your debt to income ratio. That's right. So here are certain qualifications that you must provide. Number one, you need a bank statement. Could be anywhere from 12 to 24 months, okay? And a down payment as low as 11% or higher. Now, let's talk about credit score. 620 and above. Now, the max LTV is 80%. And believe it or not, you can actually finance from 5 to 8 mixed units. 5 to 8, that's pretty damn good, okay? Now, the requirements, again, 20 to 25% down. Now, another thing is that for the co-signers, okay? If you have a co-signer, requirements, 5% down, okay? Only requires a credit score of 620 or higher, and they will need a I-797 form to be filled out. So just something to keep in mind. Now also, if you are a foreigner, I get a lot of people from Canada looking to purchase a home out here in Las Vegas. This is one for you, 25% down, okay? There may be an arm on that too as well. There's so many different type of programs out here. So this is something that you need to research. And if you guys want to get connected with the right people, give us a call today. Now, if you guys like this content and would like more content like this, let us know in the comments below and give us some ideas as well. I'm Chakits. Peace.